Good morning. I will be making a combination video of a weekly review and a weekly outlook. So what I've seen happen in the last week and what I'm expecting this coming week. Obviously updating with what I predicted last week and how it panned out and what my expectations are from what happened last week. This time we're not going to start with the dollar index like I normally would. I'll start off with the metals, with gold and silver, specifically gold because I did highlight gold last week and the week before that. But let's just begin. For those that remember, last week I was paying attention to the 4-hour breaker on the gold chart. I was looking at this series of down close candles before the expansion moved to the upside. So if we took the last down close candles, which are these white ones, and I took the highest body, which is that level there, and the lowest body, which is technically here. So from the body to body, bring that out in time. I said that I wanted to see if we could possibly reject from this area. Personally, on my end, on Friday during NFP, I was looking to see if we could have one more liquidity sweep, but we didn't get that. Also notice this fair value gap here from this candlestick's low to this candlestick's high. We have a fair value gap in the form of a sell side imbalance, and notice how we traded up into it and again and one more time, taking Wednesday's high here on Thursday. So we swept the high and then displaced on a lower time frame. We got an order block here, and technically this here on this 4-hour chart is a confirmation in the change in the state of delivery, because we had a previous candle and one that ran up to sweep the previous day high, displaced lower right after running up. The next candle makes this body as a bearish order, makes this body to become a bearish order block. So we would have something like this on the 4-hour chart. Like that. So if I had paid attention, I would have had a setup where my entry would be this body, stop loss would be the high of the order block. In this case it's over there. Keep in mind that we're looking at this candle here, so the high of this is the stop loss, and in my case my TP would have been way lower, would be at this sell side liquidity. But let's assume you want to just trade for the session, then your TP would be at this swing low created here on Tuesday. So you would have gotten a clean 3-to-1 or 1-to-3 risk reward sell entry there. So this is what I would have traded, but of course, as I already mentioned, personally I would have only taken partials at that point and moved my stop loss to break even at that point, and then watch to see if we could take this sell side liquidity. So let's dial it back a bit. That's what I wanted last week. So let's see how I came to this idea and what I'm looking for the week ahead. Going to the weekly chart. Actually, yeah, I think this is fine. On the weekly chart, I mentioned how I was looking and paying attention to this order block. It's a change in the state of delivery. We got an expansion, and the last down close candles are these two. So I highlighted this candle, and on the daily chart it was also an order block actually, let's start off again with the weekly. We actually started at this point here. Started all the way down here when I started taking the opportunity to long gold. I started here with this fair value gap here on a weekly chart and this. And I remembered I think it was also a monthly order block at that point. Yeah, the last down close before an expansion to the upside. So going down to the daily chart, I was able to capitalize on it because on the daily chart we have this order block. So it was a nested PDRA entry. We have that order block. We literally tapped into it and started running up with a fair value gap there as well. My TP, my take profit, was the all-time high. We can see this is the all-time high. We made a high there. We tried to sweep it. We failed. We swept it at this point, and now we officially made a new proper all-time high at 2,146, I believe 2,146. So that was my take profit. And for those that want to see my entry, my MetaTrader entry, this is my MT4 FTMO challenge account. And ignoring the illustrations there for a bit because that's my idea, my views on what I wanted to see. I'm not trading on this account anymore though, but yeah, it will still show what I came here for, which was this, the entry from all the way down here. I was not able to take it at the very low because we can see it's the broker that had this opening gap. So when we came back and dipped here, I entered, re-entry, pyramid, partial closure, re-entry, and then partial until the top. So the last partial was taken here because on the broker this was close to the all-time high. It was close to the all-time high at that point. If we can see at that point, looking to the right of it, I see it's the all-time high. I did not confirm if it was the all-time high on trading view though, so I took the last partial there before the weekend closed. And yeah, we can see price rallied up before coming back. So going back to what we were looking at, what do I want to see now in the week ahead? Well, first thing we got is after sweeping the all-time high, we did not even close out with a body. It was just a quick liquidity sweep on a high time frame, is what it looks like to me. And then on the daily chart, even if you decide to not look at this 4-hour breaker, we got it. This day on Monday was so bearish that we did not only sweep an extra massive, I'm not sure how many handles this is. Let's actually check for a second. From here to here, we got about 74.47 handles. We did not only sweep an extra 70 handles, plus we actually displaced the opposite another 50 or so handles, to the point that this now has become a daily bearish order block. There was a change in the state of delivery from a daily time frame at that point. So when the next day opened and we traded into it, I would have been tagged in on this. My stop loss would have been at the high of the order block, keeping in mind that I'm targeting the nearest swing low. Well, we have this one also to take more partials, and then terminus would be at this point. So at this point on the daily chart, we already had the displacement, we already had the confirmation, and if we look to the left of it, we have this fair value gap, right? Pull it out in time. Notice now Friday has closed below that fair value gap. And what does that mean? It now means that the fair value gap could be considered an inversion fair value gap. So it's no longer supporting higher prices. It failed to do that here. So now we can look for next week to possibly be use it as resistance for lower prices. But before we get there, one thing I do also want to point out is if we're going to be using order blocks for our trading, we can also pay attention to these 2 up close candles before the expansion to the downside. That on its own is another block. So if we take the bodies, and which is at this point, pull it out in time, we could look for a possibility for price to come back to it and continue trading lower. But I didn't want to highlight it because when we pull this out in time, we would notice that it's basically the same. It's a nested PD array, because at this point we have the inversion fair value gap also residing in that area. So for those that want to see what I'm talking about, we can let's just take the entire candle. So we have the low of the candle and the high of this one. Pull this out in time, becomes an order block to take it lower, but to narrow it, we can just take the inversion fair value gap there. So when price comes back to this, I'll be looking for an opportunity to take gold lower. I'm going to set a price alert on that. Going down, I'm actually going to try and boil it down as much as possible on this weekly outlook review. Of course, for those that don't already know, my videos are all time-stamped, so you can just jump to the section of the video where you would prefer to watch. So on the 4-hour chart, actually start with 9-hour chart, we have a possible fair value gap that will be created here, and I would have considered this a mitigation block because we failed to take out this high. So this the last down close candle before we try to take out the high, I would consider this a mitigation block. So this last candle, this purple candle here, pull it out in time, becomes a mitigation block to me, and possibly could sell it lower. Nearest target would be here, the swing low, and I already mentioned the daily time frame targets and terminus for me on this idea. So let's see. On a 4-hour chart, we have this fair value gap, which is also again inside of the order block that we just pointed, well, the inversion fair value gap we just pointed on the daily. Let's label this appropriately because I prefer knowing what time frame the PD array is coming from. So we have that. I can also set another alert here to let me know when we possibly trade into the 4-hour fair value gap. So if I was a trader that wanted to nest my trading idea, I would have one entry. I wanted to have nested pyramided ideas. I would have had one entry here in the fair value gap as we enter the fair value gap on a 4-hour. I would have another one here at the inversion fair value gap from the daily time frame, and my stop loss / my invalidation point would be at the first candle that created the fair value gap. So we have 1, 2, and 3 candles that created this fair value gap. My stop loss would then be here for this idea. Or if I don't want to put it at this high because of spreads, maybe I could put it at this swing high here. From Thursday the 7th of December, 10 p.m. This 4-hour time frame, I would have put my stop loss at that high. And of course, I've already explained the targets. This is a possible market maker sell model with my consideration of the initial consolidation being here. This chop around and this place lower. So every bullish PD array that was supporting price going up would now be used as an inversion going back down. And I liked that NFP created this displacement here. And I do not want to see us take the previous week's high, which I believe was on Monday. I don't want to see price even trade up to that going into next week. Speaking of next week, on the calendar we do have CPI. We also have FOMC in the PM session on Wednesday, I believe. So the best trading days would be on Thursday and Friday for those that are intraday traders. I will be trading basically every day, but yeah, just something to note on the side. Going down to the 1 hour chart, we have the same idea. On the 1 hour though, we could possibly use this level here to react and trade lower, keeping in mind that we have a bullish candle there before the fall off. So this candle on its own could act as another block. Price may not have to go all the way back in here to start selling off. It may just use this level, open up on Sunday, today, well, later tonight, create a new week opening gap into the other block, and then start falling off from there. So price may not even come up all the way here, but I would prefer it does so. I would prefer it comes back to this level. And there's a displacement I was talking about again on Thursday. We have a sweeping liquidity for the sweeping previous day high, and this was at 8 a.m. before, I believe, some news at 8:30. So we got a sweeping liquidity at displacement that created another block there, and we'll look at how price respected that level before falling off on Friday. So this was a very clean setup actually, but going back on track on what we are looking at. So yeah, price may use this and fall off, but I would prefer it coming back to premium. If we draw a fib from this swing high, which I think is, yeah, this is Friday's high to Friday's low, we can already see that the OTE entries, which are these two orange lines, the brighter one is the one I would prefer the most, and the lighter one is the 61.8 level. So I would like to see if price could trade higher into these OTN. Notice how the two of them, the two levels, are within the inversion fair value gap from the higher time frame that we just highlighted, from the daily chart that we just highlighted. Of course, if we want to see where the premium or discount is, we can also see that here. Actually, let's just show premium and discount. We can see this alert that I set here from the 4 hour is also where the fair value gap is on a 4 hour perspective, and we can see this PDRA is also sitting above the 50%. So if I wanted to trade this, I would rather wait for a premium to take it back down. But I've already covered why price may not need to come up all the way to that premium and may just use here based on the 1 hour time frame. But we'll see how Monday and Tuesday opens for us and what opportunities we may get. The next one I wanted to review, or well, not review, basically I wanted to see what I wanted to see moving forward is silver, because it's the closest related pair to gold. So moving on to silver, we can immediately see how much weaker silver is compared to gold. Let's actually zoom out a bit to, let's say, the weekly chart. On the weekly chart, we can see, looking at this high from the 1st of May 2023 to Monday of last week, well, this previous week that we just had now. Let's try and compare that to gold's price action. If I can just find it. I'm not sure how I keep skipping it. Oh, so it's a 1 minute chart. So let's go on to the weekly time frame. We can see the difference, the very obvious difference. So this is the 1st of May. We can obviously see the same point here, and notice the massive SMT divergence. So if we wanted to trade this, being able to identify which one is the weaker of the two is actually key, because if you are a seller in this market, selling the weaker one of the two will profit you more, because you're less likely to have a liquidity sweep to the upside as compared to the other one. So we can see the massive SMT divergence between the two, right? There's a liquidity sweep that was done on this side to take out the all-time high, but none of that was there on silver, as it refused to make a new high. So here we had a sweep in liquidity, and here we can consider it a failure swing, or the failure swing on that side. So going back to looking at this one, we can already see, if we still staying on the topic of order block, we can see the change in the state of delivery from a weekly perspective at that point. But because we are weak, because we're weak on silver, the likelihood of us trading all the way back here is probably going to be very, very slim, very little. But I'm not going to discount that. I'm not going to brush it away, and I'm actually going to highlight this weekly inversion fair value gap, because as of this week that just passed, we officially closed below this fair value gap. We are definitely not going to be supporting it for higher prices. We're not going to use it as support, for higher prices, and we've definitely closed below. So this could be a possible inversion. Yes, price could trade all the way from here to there and use it as an inversion for lower prices, but again, as I've already mentioned, because it's the weaker one of the two, we may not even trade all the way back there. So going down to the daily chart, I do see, let's appropriately label that, I do also see this inversion here on a daily perspective, and I guess we could call this hindsight, because on Thursday we actually closed below it. When Friday opened, we dipped inside of it and even refused to trade to the consequent encroachment, which is the halfway point, this dotted line. We failed to, this dashed line, we failed to even trade up to that point. We just covered here, barely the 20% of it, and fell off from there. So I get the feeling that we may not trade back all the way to this premium because of the weakness silver is having right now. We also have this inversion fair value gap here, which is very likely to be traded to. So going down on a lower time frame to see if we can spot any lower time frame PDRAs. Yes, price has the likelihood of definitely trading up into this fair value gap on a 4-hour chart before continuing to the downside. And this may actually be the pair that I pick to trade next week, because the likelihood of us trading above this 50% I really don't see. But if we do see that, it's a higher probability trade to take from here. So what I'm going to do is I will look for a possibility of us trading into any of these bearish PDRAs. Let's clear this up a bit. I'm going to set an alert at that point. I'm also going to set another one at this point, at this fair value gap. And lastly, at the mitigation block or breaker or order block, whatever you would like to call it. So at these points, I'm not going to blindly sell gold unless I am willing to hold any drawdown. I'm willing to hold a drawdown. Notice also how we are close to clearing the sell side liquidity on this possible market maker sell model. Because if we consider this to be the initial consolidation, the chop, the displacement reaccumulation, and then finally displaced on Monday without any pullback, we did tap into this and fell off. Silver was really showing the weakness it had. It barely traded up into any of these inefficiencies and then continued falling off from there. So because we're so close to the target compared to gold, I really don't think we're going to trade up to this point. So I might just have, if I blindly sell silver, I would have a wide stop loss, which obviously will be the swing high, and targeting this swing low there. But if I don't want to do that, then at these 3 points I would look for a lower time frame confirmation before I entered. What does that even mean? For example, on this daily order block, because we had an order block there on the daily, we had a change in the state of delivery. At that point, you could have easily gone down all the way to your 5 minutes chart and found a better risk reward, if you want to call it that. Notice here, after we swept the liquidity on Thursday, because this was Thursday's price action, notice how we got a displacement below, a possible shift to market structure on an even lower time frame. I did not want to go down to the 1 minute, but let's see if we'll get it there. So on the 1 minute chart, this is what we got. This is boiling it down as much as possible. So here on Thursday, we created the high of the week last week after sweeping liquidity. We displaced below, making this a market structure shift. So when this candle closed below this, it doesn't matter what your entry is. At this point, you can have a stop loss at this swing high, right? Immediately this candle closed below. But we did even get an entry, because when we displaced below and closed below this swing low, making it a valid market structure shift. For those that are not sure what that means, I mean this, we created a fair value gap here. So at that point, you could have entered, I'm not sure, whatever the biggest lot size you want to enter is, keeping in mind that yes, this is a 1 minute chart. Yes, you might be taking partials at this swing low, and yes, you could possibly zoom out and take more partials when we cleared the lows that we highlighted from a relatively higher time frame. Yeah, you could do all that, but the idea is for you to get a better risk reward, because at this point, if I had entered the sell here, right, if I decided that this is where I'll be selling off and I'll be putting my stop loss technically should be at the high of the first candle that created the fair value gap in the first place. So this should be my stop loss, but let's just assume I did not do that. Let's say because of spreads I put it here, right, or even the swing high, the high of the day. This is still fine, because if we remember, I am not looking to take profit on this 1 minute chart. I'm looking to take profit on a 4-hour chart. So let's zoom out in time. Jeez. Actually, I think I'm making a mistake here, because this thing is so small now that I can barely see anything. Okay, like that. So let's just say, yeah, this is the entry that you take. You refine it as low as your 1 minute chart. You notice at this point you can have a massive risk reward. It's a 13-to-1 risk reward, rather than taking it from a daily time frame. Because if we took it from the daily time frame, remember this was a daily order block, right? That line, this line is a daily order block, and if you are taking it here, your stop loss should have been there, all right? But in this case, we narrowed it down as low as the 1 minute chart to find a better risk reward. So when price gets to the daily order block, when my alert goes off on that daily time frame, I wouldn't blindly enter it. Well, I can, but if I wanted a better risk reward, I wouldn't blindly enter the trade. I would look for this. I would look for a lower time frame confirmation that I can take, and even if price goes a bit to profit and makes a new high, that's okay, because by the time it's already here, I would have moved my stop loss from up there to break even. So when it makes a new high, that's okay. I would look for another displacement, another re-entry, and then keep doing that until finally we break out of this consolidation on a higher time frame and continuation to the downside. So That's what I'm looking for on silver if I don't want to blindly enter those fair value gaps that we just highlighted now. These ones. And the ones on the 1 hour. The same thing here. So if I did not want to do any of that, I could just look for a confirmation here. But now that I'm on the 1 hour chart for silver, pulling out our fib from that high to this low, we can see at the 50% mark we have an order block residing there. We may just use this order block as our entry to fall off. We might not take the high of this order block, which is a 4 hour time frame fair value gap, a 4 hour CB. So price may just run up to this order block from the candlesticks low to body. So from this area to that area, this would be the bearish order block, the way that finesse teaches us. So now moving on to the dollar index. Finally, after all that long ramble, which I apologize for, but moving on to the dollar index on the weekly chart, I had this area personally as my draw on liquidity, this weekly sell side imbalance, buy side inefficiency. So this weekly CB, I was looking to see if we could trade up into it, because after we rejected off of the daily inversion for fair value gap, I saw a massive displacement and a shift in market structure. So I was looking for the nearest PDRA in terms of buy side liquidity or inefficiencies. So in terms of liquidity or inefficiencies, and I saw on a weekly chart we have this inefficiency. So this became my target for the week, and we can see prices tagged into it. But I don't think this is all we get. I don't think the dollar starts trading back lower from here. We may trade as high up as this bearish order block, which is also why I have it here on my chart. So we may trade as high up as that bearish order block. But I'm not going to look that far right now because it's December. I should not be trading right now as it is, but I'm just doing it for the sake of keeping my mind sharp. So going down to the daily chart, inside of this weekly sell side imbalance, this highlighted area, I know there's too many lines on the screen right now, but I'll remove them in a bit. Inside of this weekly fair value gap in the form of a sell side imbalance, notice that the consequent encroachment, the dashed line, this gray line, is right below this swing high from the daily chart, this high. So in other words, we could realistically see us targeting this swing high going into next week as price trades to the 50% point of the weekly consequent encroachment. So in other words, I'm bullish on the dollar still until we take out this swing high. That's all I'm thinking. I'm not sure. I'm not saying that we're going to get there, but with the way price has been bullish, I'm thinking that it's a possibility. So going back to the weekly time frame, actually, just wanted to make sure there's nothing else I'm missing or anything else I wanted to cover. We could also see a possibility of price trading higher and clearing this buy side liquidity that I had over the past couple weeks and months. So there is that chance of price trading back all the way up to this point. We also see the rejection on the monthly time frame. On the monthly time frame, yes, we do have this inefficiency, this buy side imbalance that I wanted to see if price could use as a support for higher prices. But we can see during the month of November how we just broke through it and even closed below it, making it an inversion fair value gap, making it an even more of a higher time frame target that we could reach up to before rejecting lower. Or we could just completely discard that and look at this point, the last down close candle before the expansion up. This to this would technically be an order block, even though the whole thing's an order block, but this to this would be the sensitive area as we just highlighted. So pull this out in time and notice how the bodies are still staying within this area. So we could have completely ignored this fair value gap and price may just continue shooting up to finally take out this buy side liquidities on a lower time frame. So there's that chance, there's that possibility that this was just an accumulation, manipulation, and expansion to the upside, and this was just a retracement for re-entries to take it back up. So I'm also keeping an eye out on the higher time frames in PDRAs. So now finally we can go down to the daily time frame. I'm leaning, as I already said, I'm leaning towards bullish prices, even though we have already tagged into that weekly PDRA. Yes, we've tapped into it at this point. Yes, even at this point we tapped into it, but I still think we have a little more upside to do before the follow up from here. So look at how price has been respecting bullish PDRAs last week. Yes, it was choppy. There was a big move up, then a big move down. There were wicks all over the place, but we were still supporting bullish PDRAs. So the first time we did was this BC. We tagged into it as we opened on Monday and then continued expanding higher. On Wednesday, we saw a big reversal down, but even that reversal down was not a big issue because we only came to tag this order block. It's an order block because we closed above it at this point on Tuesday. We closed above it, so when price came down all the way to it again on what day was it? On Wednesday, on Thursday, it could have been used as an opportunity to take it back up. So that's something to look at. So we got in there, spiked higher. And even for those that wanted to consider this, because some people might come to me and ask me, well, what about this? The last up close candle before the move down, right? Isn't this technically an order block? Yes, I guess in a way we can consider this a shift in the state of delivery. But look at how price came to it, broke through it, and even took out the high of this order block. So if you had sold from this area, your stop loss would have been hit because your stop loss would have been at the high of the order block. So now that it's been invalidated, that's even more of a reason why my mind would look to see if this body could be used as support to finally reach the target that I'm looking for. So in other words, I would like to see if price could trade higher, come back to it, and then take out the swing high that I'm targeting. So this is a possibility. Now that we've violated bearish PDRAs and respecting bullish PDRAs, we may just see this happen going into next week. I'm not sure about after the target hits if we'll go deeper into it or if we'll start seeing a reversal from there, but I'm looking for this swing high as my draw on liquidity for next week. So the next thing I wanted to highlight also was of course I'm mostly looking at inefficiencies like fair value gaps and swing highs and swing lows when it comes to high time frame. Intraday, I will look at the new week opening gaps, I will look at the new day opening gaps and everything, but on a high time frame I'm only looking at these order blocks, breakers, fair value gaps, liquidity. So anyway, on a daily time frame we have this tiny inefficiency, this tiny fair value gap there. Yes, I know it's small, but price could potentially come back to it and use it to rally up going into next week. So because of that, I will be putting an alert on it to let me know that we have tagged into a daily inversion fair value gap. And I don't need to have this, it's just less clutter on my screen. So let's go down to the 4-hour chart. Delete this. On a 4-hour, we can also see the same thing that I'm talking about. Yes, we had a liquidity sweep at this point. Yes, this could be the beginning of a turtle soup, but I'm not going to be the one trying to catch the tops. I'm not going to be the one trying to catch that initial reversal. Like, yes, this could be a turtle soup and we could see price trading lower from here. But right now, we are bullish, and I'll stick to being bullish until proven wrong, until we are no longer bullish. So, as I already mentioned, we had the daily fair value gap, which is where this alert is. The daily inversion fair value gap from this side, right? Look at how on the 4-hour chart, we also have a 4-hour BC residing there. A 4-hour fair value gap in a form of a buy-side imbalance. And I believe, yeah, on the 1-hour chart, we also had a fair value gap. We dipped into it, and yeah, I think this was NFP dipping into it, traded a little bit lower, and then continued going up. So right now I'm going to stick to the 4-hour chart because it still looks clean. On a, if we trade and close below this specific 4-hour fair value gap, I'm actually going to set an alert with that condition. Invalidated rules. So if we trade and close below this 4-hour BC, only at that point that I might consider the possibility of us continuing to the downside. Only at that point that I could consider this an inversion fair value gap, because on a 1-hour chart, that area is basically where NFP madness was happening. So the time we can close below this swing low, we would have probably closed below the 4-hour fair value gap, right? This BC. So only at that point that I could start going on a lower time frame like this 1 hour or even 5 minutes or lower than that. Then consider us taking price back lower. If that's not the case, if this hasn't happened yet, then I would look to see if we can take the dollar up from here. So moving on now to euro and pound. I'm not going to look at them too much because the correlation is slipping away quicker and quicker. So I'd rather just look at the dollar index and stick to that. Then pick a pair that's stronger or weaker for the day, depending if I'm looking to buy or to sell. On GBPUSD, I highlighted a couple weeks ago, I believe 2 weeks ago, that we are looking at this monthly order block, and there's a possibility that we could use it to respect lower prices, and we had these targets in mind. So right now, yes, we are rejecting from it. Yes, we might still sweep this sell side liquidity the same way that I say that we might still sweep the buy side liquidity on the dollar on DXY. It's the same way that I believe we could sweep this sell side on GBPUSD. But because it's December, because I can't really probe price action that well yet, I will only be looking for intra-week opportunities and intraday opportunities. So right now, we have rejected from the monthly order block, and we're now trading inside of this weekly buy side imbalance, right? So what do we do here? I am not sure. We have not closed below this weekly buy side imbalance. Actually, because we're looking at this, we might just set an alert that says closure, and we can call this a change in the state of delivery on a weekly perspective. So if we close below this weekly buy side imbalance, it will now be an inversion fair value gap, and that could give us the possibility of trading even lower on GBPUSD. So that's going to give us, of course, in confluence of the dollar, by the time the weekly candle closes below this, we can then see better where price could go to next. But this would be a proper area to take price lower if we do make this an inversion. On a daily time frame, The pound has really been struggling to move anywhere. It hasn't really gone much. It hasn't done much the past 2 weeks or so. It's just chopped around a lot, and only on Friday that it tried to break through, but even that struggled to close below. It did not even close below this candle, so we can call this an order block, a bearish order block, to continue taking it down. Because if we close below this, I was going to have a trade idea easy for next week, because I'm looking for dollar to go up. So I might look for this area to take the pound down, you know, at least clear this swing low. But that's not the case here. So the pound has really been struggling to move lower. In a way, we are still supporting or respecting lower time frame PDRAs. In this case, we tried to use this to fall off a bit. We came back all the way back to it. On a 15-minute chart, same thing is going on. I actually traded this on Friday after NFP. So post NFP, I was looking at, price was actually at this point. So at this point, this was NFP's move down. We immediately rejected back up without taking. There was a 4-hour sell side liquidity. That liquidity is residing that side that I remember wanting to target. In any case, even if there wasn't liquidity that side, there's this sell side liquidity that we just made now during NFP, right? So we failed to take out these highs, and because I saw this displacement using the order block theory that we learned from Finesse, I looked at this as a change in the state of delivery. I labeled this as my order block, bearish order block, and put my stop loss above the swing high. This high, actually not the order block high because of spread. So I put my stop loss there. Also keep in mind how we are respecting bearish PDRAs already before NFP. So before NFP, we tapped into this and fell off, right? Price came back up into it again, displaced sharply again. So I looked to see if we could sell from here, and I set my pending order. The moment we closed outside of it, I set my pending order to take it when we get here. I set 3 of them actually. One at the entry, one at the midpoint of this week, and the biggest one at the body, because that's the most sensitive area. And the stop loss for all of them were all here. I wanted to see us take out this low and then higher time frame swing lows from a 4-hour. And then watch price trade. At this point, I walked away from my chart just in case we do come back up to it. But we eventually swept the swing low without tagging my entry. So this already invalidates the idea, because we've reached the target, well, the main short-term target, before my entry. But I hadn't seen this, and later that day, later that night, price actually came back all the way to the order block and tagged in 2 of my entries. I remember I got tagged twice. Yeah, I remember the one that was halfway. I got tagged there and I got tagged there. And this was now when I came back to shut my PC down for the day. I saw price trading lower and I decided to close it at this point, because again, it's already reached my target before my entry. This is no longer that high probability to me. And then price actually traded lower from there. I almost started saying I should have held it a little bit longer, but I closed it in profit, so it's fine. But look what happened later. After trading lower, we didn't even come back to this again. We just traded as low as this and started pushing high again. I believe all the way back up to my entry. If my pending order was still there, would have been, yeah, we basically did this the whole time. Yeah, basically chopped until closure. So because of that price action, I didn't regret this move down. I didn't regret not being part of this move. So moving on from that, pound is not really the clearest on a lower time frame right now for me. For me, the clearest PDRAs are on the higher time frame, like the daily and the weekly chart. On the daily chart, one thing we do have is a proper inversion fair value gap there. So yes, I could look for this, I could look to see if we could tag into this inversion fair value gap and try and look for a lower time frame confirmation, as I've already highlighted earlier in the video. So I'm looking to see if we could use this as an inversion. I'm looking to see if we can find the high of the week inside of this inversion fair value gap on a daily time frame, but I'm not going to blindly enter any of these positions. I'll be looking for a lower time frame confirmation. In other words, I would look to see if maybe on a 5 minute, on a 1 minute, or even a 30 seconds time frame, if we could trade into this, because this is the highlighted area, right? So I would like to see if we could trade into this, have some sort of swing low created, maybe one more liquidity sweep, then displaced lower. At this point, I'll be looking for my breakers, I'll be looking for my fair value gaps, and 5 minutes confirmation is already done, so I can have my stop loss here instead of worrying about the daily time frame stop loss. So when price trades back into this area, I would look to sell it off. Of course, I've already mentioned the target that I have on a daily or weekly perspective. Jump into the weekly. My target is to see if we could close below this. So obviously my swing low, this swing low from last week, could be a reasonable target on a daily time frame. We also have this swing low there, which is where I was actually targeting post NFP. I was looking to see if we could trade to that point, but we didn't. So this is what I'm looking for next week. Yeah, I'm looking for an idea like this next week. So let's actually set an alert to look for a lower time frame market structure shift / confirmation / change in the state of delivery, because we could have something like an order block at that point. So let's call it look for market structure shift or change in the state of delivery. So when price comes back in there, I'm not gonna blindly short this, I'm not gonna blindly sell this off. I'll look for a lower time frame confirmation, even if the confirmation happens here after we have rejected from it. That's better for me than taking this, because if I took this blindly, the first candle, or the third candle that created the fair value gap, remember there are 3 of them, would be this one. So if I took this blindly, my stop loss would be at this high here. So yeah, the risk reward in that case would not be the best anymore, because if I had entered here with a stop loss at the high that made the fair value gap at that point, and my target was the swing low at this point, we can see my risk reward is 1.6 to 1. But if I found a confirmation on a lower time frame inside of this inversion fair value gap, and we can already notice how immediately my risk reward goes to 9 to 1. So I'll look for a lower time frame confirmation for a high time frame target for a better risk reward. Moving on now to EURUSD. I'll only cover one more currency pair, which is USDJPY after this. So EURUSD, we can also see that I was looking for the possibility of us trading back into this volume imbalance that we created on the daily time frame. I already mentioned that I'm short-term bullish on the dollar, on DXY, and we can already see that I'm looking for this initial consolidation of this possible market maker sell model, right? I'm looking for the confirmation here, but it will be a solid confirmation if we could close below this massive imbalance. So if for some reason we close below this already confirms that we are really bearish on EURUSD and therefore bullish on GBPUSD. So let's actually delete these. I don't need these anymore. Yeah, if we can close below this. So I'm short-term bullish on DXY, and we may be bullish here. We may be bearish here, but I'm also looking at the level of the drawn liquidities on a on the PDRA matrix. In this case, a volume imbalance is next to a liquidity void in terms of draw on liquidities. So yes, we have this volume imbalance, and the likelihood of us trading in there is high. As I already said, this could potentially be a turtle soup that we had on Friday when NFP came and swept these lows. This could be the beginning of a reversal. But again, I've already mentioned that I'm looking for something like that only if and when we trade we start respecting bullish PDRAs and disrespecting bearish PDRAs. So when we have a market structure shift, when we have a change in the state of delivery, when we have like a massive displacement to the upside, price trading back down to it, I'll probably take that up with it. So I have all these conditions already outlined, but yeah, we have a sweeping liquidity at this point, and we displaced higher, but we're still playing around this area for now. So just like GBPUSD, nothing really clear on a lower time frame for me. There is so much clarity on a higher time frame. On the daily chart here, for example, we can possibly see the 2022 model after trading up into a high time frame PDRA. This inversion fair value gap is from a weekly. For those that don't remember the previous video, we have this weekly inversion there. From this BC turns into an inversion. Got a displacement. We even closed below this bullish candle, making this an order block, so we could trade back into it and then continue lower. So yeah, so many things are possible on a high time frame. We can easily probe price action there. Also on the weekly chart, before I go lower, we have this order block here. Price could possibly just be trading into it. See, we have already tagged into it, so price could possibly be tagging into it to continue moving higher. Just like the dollar. The dollar has already tapped into a high time frame PDRA, a weekly CB in its case. It can continue lower on the dollar, so this could continue higher. But I'm not looking to pick a side yet until we get a confirmation, which is why I keep saying that we could see a possible 2022 model here, where we had a sweep in liquidity into a high time frame PDRA, which was the weekly inversion fair value gap. So this would be a sweep in liquidity. We got a displacement and a closure below a previous swing low at that point. So yes, there's no body closures there, but here we got a body closure. So this becomes a market structure shift. On the daily chart, we could possibly consider this as an entry to continue taking price lower. So we could possibly see something like this using the 2022 model on the daily. But on a lower time frame, it's a bit too choppy for me. The only time frame that makes the most sense is when you go on a 1 minute chart or lower than that. But look at the 1 hour chart, for example. We just see bearish signatures. We don't know if this is a reversal because it was violent. We could just see a reversal here and the beginning of a market maker buy model. Very possible. Very possible, but nothing confirmed yet. On a daily time frame, it makes sense for us to come back here and trade lower. See, so many things are possible here, but I'm not going to pick a side until we get a lower time frame confirmation. Then I can take this a little more confidently. For now, this is all I see, and we can move on to USDJPY. Let's start off with the monthly time frame on this pair. Remember, US dollar is the first currency in this currency pair, so in this case whatever I'm looking for on the dollar is what I'll preferably be looking for on the yen. So I'm looking for higher dollar, which means I'm bullish on USDJPY. So going in with that mindset, let's delete this quickly. We have this last down close candle before the expansion, month after month after month, and got close actually to the all-time high, which is the buy side liquidity at this point. let's look at this high here. The high of this candle is 151.946, and then the high of this one is 151.912. So we did not sweep this liquidity yet. We haven't taken out this buy side liquidity yet. And looking at how price was respecting bullish PDRAs until that point, we created an order block here that I would have thought price would use this to reject higher. So when price came down here, I would have expected it to reject higher. I would not have seen this low, but we'll see what this low is on a lower time frame in a bit. For now, let's measure the entirety of this down close candle. We can see the halfway point is actually below this low, below this previous month. I mean, not this old month, the August low. It's below the low of August, and we have not swept that yet. So we could see price trade down all the way to this 50% point of this huge candle, or we could see a possible reversal from here. So going down on a daily time frame, we can easily see, actually let's start with the weekly. On a weekly time frame, I was looking to sell USDJPY. I think those that remember, those that remember from the daily chart, I mentioned last week that we were respecting bearish PDRAs, and we have this internal sell side liquidity, which we actually eventually tagged. So that was nice. But I also mentioned that I was looking at this bearish order block, the last bullish candle before the expansion. And remember where they were coming from. They were coming from this CB. Price came, reacted off of it. On a 4-hour chart, it was even a 4-hour CB at that point. And yeah, we can see how price just melted off from there. So I say this because any yen pair has actually done the same. Every yen pair is actually just falling off from Tuesday all the way to Friday without much of a retracement. CAD JPY, the same thing. EURUSD, the same thing. We didn't even, it was so weak that I couldn't even take this trade. I was looking to see if we could trade higher up into this so I can sell this off, because I saw a nice a decent high time frame draw on liquidity. But we're not going to go into that now because I'm not covering exotics here. But I'm just showing how all the yen pairs basically did the same thing, same structure to the downside, fall off, and then of course USDJPY fall off. So on the daily, we could continue falling off until we take out these lows here, or until we reach the 50% mark of that tail from the monthly chart, or wherever. We can see a reversal actually from any point. But let's do the proper top-down analysis. We already came off of the monthly, and we have decided that the monthly is possibly bullish because of the relative swing highs that we created, trading up to that high on the 13th of November without taking out buy side liquidity. So yeah, we're looking to see if we could tag that buy side next. We rejected off of the main threshold of this order block, I guess we could call it that. Okay, we didn't even reach the 50% point, but we are still inside of the monthly order block. So I'm paying attention for a possible reversal from here, or a possible sweep, one more sweep in liquidity before a reversal. So let's just go down to the lower time frame now, since there's not much going on here. If we are bullish on this, like we are bullish on the dollar index, we would like to see a lower time frame confirmation, a lower time frame market structure shift, or change in the state of delivery. On an hourly chart, we actually have that already. On an hourly chart, we failed to sweep here one more time, to sweep liquidity one more time from Thursday. Yeah, from Thursday. We actually now respecting bullish PDRAs, and bearish PD arrays are now becoming inversions. For example, this one, this is a CB. Price should have traded up into this and continued lower, but look at how we just used it as an inversion. Later we broke above it, closed above it, comes back to it. So yeah, we are now disrespecting bearish PD arrays and respecting bullish PD arrays. At this point we had a swing high, pulled this high in time, and notice that at that exact candle we had a market structure shift. I'm not sure what this is. At that exact candle we had a market structure shift. We have not created a fair value gap yet. We have not, on this is a 1 hour chart, we have not created a solid fair value gap that I would have taken this from, but I see on Friday before the market closed we have this fair value gap. So we could see a potential move, a potential possibility of us trading into this and then continue into the upside. So I'm also going to set an alert at this point with the statement saying 5 minutes or 1 minute market structure shift or change in the state of delivery. I've already mentioned what that means. It's basically an order block. So on the 5 minutes time frame, I would like to see if we could trade below this chop. There's the line, for those that can't see, it's this line. If we can trade below this chop quickly and then look for a lower time frame confirmation, then an expansion to the upside. So that way my risk reward is better and we could potentially hold this to the all-time high, potentially, because again, if you remember, the higher time frame drawn liquidity is the buy side liquidity there, and that's, I think, the all-time high. Yeah, it's the all-time high. So yeah, that's all I'm looking for on USDJPY. So going on now to, well, of course, the second possibility is us trading lower. So we could just draw the swing high to the swing low. We could trade, we've already traded above the 50%. We could have an OTE entry trading up to this level after taking out this swing high and reverse from here. So yeah, that's a possibility, but I'm favoring bullish prices on USDJPY. I just would have preferred one more liquidity sweep before I can take it back up, but we could, nothing is stopping us from just going up from here. Moving on to the indices now. My idea, my views on the NASDAQ has not changed. There's not gonna be any real updates yet. I mentioned the other week that we are coming off of this other block, the last down close candles, well, the highest last down close candles with a fair value gap there, and look at how price came down to it. Wick to body, remember that, wick to body, came down to it inside of this. It's a unicorn setup, and look at how we just rejected higher from it. So I'm looking for a continuation of this to the all-time high. This is not the all-time high here, but this is this continuous contract high. So, but I'm looking for the all-time high on this. And we can also see that on the daily we've been chopping around, which was why I thought, you can see there's an alert here, I thought we are gonna do one more liquidity sweep and then a sharp reversal, but this reversal was not really sharp enough. We did come down on Friday to tag into this other block's body. Notice also on the lower time frames we have an inefficiency that we tagged into from NFP. On the 1 hour, I think we have an inversion also. Well, no, not really, but yeah, on the 1 hour we traded lower into discount of this range and then continued higher. So yeah, I'm still looking for higher prices on NASDAQ. I don't really see us trading too low going into next week, because on Friday's price action we had a chop the whole day. This was during London that we created this fair value gap, and then when NFP fell off, taking out liquidity, taking out all these lows, making this series of up close candles before the fall off to become a breaker. So we traded back into it, making this CB that should have supported lower prices to become an inversion. So we came back again to it, nested PDRAs that support higher prices at this point, and price traded higher. So now I consider this to be a balanced price range, and we may possibly even see the low of the week only test into this high time frame. Well, high time frame in this session wise, because the 1 hour is not really a high time frame, but we may come down into this and just continue trading higher from here. So let's highlight this to be a BC from the hourly chart. If price comes down into this, I'm not going to blindly buy the NASDAQ. I'll look for a lower time frame confirmation for me to take it back up. So yeah, that I'm looking for higher prices. I don't see price trading all the way back down to these areas because we have chopped around there a lot that I could consider this to be a balanced price range. So there's a chance that this could be the low of the week inside of here, then a continuation to the upside. So yeah, nothing new on the NASDAQ, and similar price action on ES. On ES, we do have to mention that we have also cleared another high. That swing high right there, we finally broke that high, and the next target is the one from the 27th of July 2023. That's 4734.5, and yeah, beyond that we still have other highs on a higher time frame, but specifically on the NASDAQ, there's a chance that we could see the all-time high coming up soon. On ES, could follow the same pattern. We could just break this high, making these series of down close candles to become an order block, so we could come down to it possibly, and then all-time high, or we could just fly up straight to it without any retracement down to these. But that's what I'm looking for on E-mini S&P 500 and NASDAQ. Still looking for higher prices. I'm focused on NASDAQ because it's bringing a cleaner price action and it's closer to the buy side. It's the stronger right now of the two, so I'm looking at NASDAQ specifically because of that. So I'm looking for higher prices here. On every time frame, it's the same thing that I see. We are still in this massive range that we've been chopping around for I don't know how long now, but I would like to see a break above this and a continuation to the upside. Yeah, that's all I have on NASDAQ, and every other pair that follows the same. DAX on the other hand is just making all-time highs every single day, every single week, so I'm not really going to try and catch this. It's not giving a deep retracement either. It's not giving discount PDRAs that I could trust, and when we look at it from the monthly chart, we can see that we are at the all-time high. We are creating new highs every week, so it's hard to really trust this. Yeah, bullish candle week after week after week after week without trading. We don't even retrace back to any fair value gaps, nothing. We just continue pushing higher and higher. So yeah, I'm not gonna touch this guy for now. Stay safe, good luck, and good trading.